It has been a tough year overall for investors who've had to deal with falls, a great deal of volatility and uncertainty overall. But if you have stayed put through all of it, you haven't done too badly as compared to investors around the world. Indeed, India has been the best performing large market this year. But what next is the question. Hello and welcome to the Samvat special. I'm Prashant. With me, my colleague Sonia Shenoy. Sonia, hi.
Hi, and what a Diwali it's turning out to be, right? I mean, we're celebrating Diwali properly in its entirety after what, almost 2-3 years maybe?
3 years, yeah,
2 years for sure. So it's all guns blazing, and we have two veteran investors. I think between them, they have about 70 years of experience in the markets. Let's welcome them on board. Manish Chokhani, Director of Enam Holdings, and Raamdeo Agrawal, Chairman and co-founder of Motilal Oswal Financial Services. Gentlemen, happy Diwali to you, your families. Raamdeo ji, how are you feeling this time?
Very good. I'm always fully invested, no issue in the sense that, and retail investors have kept the market alive for last 12 months. So we are kind of very large in retail. So sentiment has been very upbeat. We just had retail conference. It was stunning. The sentiment, the participation, the size. So I think I'm doing fine, and let me wish all the viewers a very happy Diwali and a prosperous new Samvat year.
You know, Manish, we were having a discussion just with Navneet Munot a while back, and he also agreed to the fact that if last Diwali, someone would have told us that by the time next Diwali comes through, we'll be down just about 5%, given a raging pandemic, you know, decade-high inflation and slowing growth, people would have taken it with both hands. Do you feel the same?
I think so. So first of all, let me also wish everyone a happy Diwali. And just to take on from what he said, if you sit back and not just about the money and the outperformance of India, just think if you were a girl in Afghanistan or in Iran, or if you were a person in Pakistan going through floods, or you were someone trying to look for petrol in Sri Lanka or in Germany so you have a lot to be grateful about beyond the fact that we've reopened and come back. So it's not just about money, but let's just enter this year with a sense of gratitude. And then coming to your point, obviously, if you had said, you know, oil will be $130, FII sales will be 30 billion, there will be a war in the world, we would have said sell the market and run away. And here we are sitting with market probably, what, 2% up or down over the last 12 months. So, sure, a lot to be grateful about.
This is a new one though, right? I mean, this kind of outperformance. Have you ever, both of you, ever seen outperformance like this in your lifetimes, Manish?
No.
When you said 70 years, it's 50 there and 20 years. So
I was expecting something like that.
It is more like 80 years.
We don't want to disclose the ages, so let's say 70 years between all of us, right? That would work. Go ahead.
No, so my thought is that, see, once we broke the Berlin Wall in the 1990, we've had 30 years of globalization, and the US has ruled, and interest rates have only gone down and multiples have only gone up. That regime is clearly over, and the world's breaking up. Supply chains have broken up. The world's divided into camps. You have, Russia, China, maybe Saudi on one side, and US. So all of this is getting reset, and therefore this theory that now you can just bet on a secular trend and the Fed can come and save you, I think that story is over. And it goes back, in fact, to the era we come from, where it was good old stock picking, and every time you wanted to make a macro case for India, it was bearish. And every time you wanted to make a micro case because you make money bottom up. That's really been the story. Even last year, if you look at what happened, you could have made money in Sun Pharma and Cipla and lost it in Divi's and Aurobindo. You could have made money in Mahindra and Mahindra and Eicher and lost it in Tata Motor. So it's the most hated sector was public sector. And public sector banks, public sector BL, HAL, all have done remarkably well.
So your
point, it's become that sort of market.
So you're saying it because it is so deglobalized and things are breaking up. I mean, so that's the reason why India stands out particularly. That's one of the reasons.
Yeah. So there's lots to do over here, and it has always been a stock pickers market. So this trend line where you just say you can buy a country or you can buy a sector, and this move towards ETFs and passive funds, I think is going to get severely tested now, because it was easy in a unidirectional world and a unidirectional market, and that's going to change. And as someone running an asset management business, it's great news for them, because all these guys, including Navneet, that's the time when you separate men and boys. You don't need to do anything in running a passive fund, but that time is here now.
You know, I think the big story last year was to sell IT and buy financials, right? And that worked out beautifully. Amdetji, what do you think the big story will be from this summer to next?
I think finance will continue. See, what happens is that it's like it's a cycle in the sense that in 2000 you had the one big Y2K boom when the tech actually came into forefront first time. Then people overdid, and of course at the end, whatever is good, it becomes euphoric. So that's what happened, and we saw a tech boom, and in 2000 we collapsed, and then they said let's not do tech again. So what they did, financials. So you had a global financial crisis in 2008, and then they said even finance is bad. So now let's rediscover tech. Now tech came in the form of digital online marketing and all that. In 2020 you overdid. This time not in the public market, you did in the private markets. So in private markets, but clearly around the digital and loss-making companies and all kinds of, you cannot imagine what stories they gave, and they're down by 80-90%. So I don't think the world is going to again take the liquidity out there in the next round whenever this problem of liquidity or inflation is done. Then the world will again reorient towards in next 3, 4, 5 years. I think they are going to go to the non-tech industry. Now, whether non-tech will be finance or finance plus, that one has to see. But it looks that finance is very large, I mean, bigger than even tech. So that's a good place to park yourself. And all the banks are clean. The books have been double severely tested. I mean, pre-COVID itself it was tested, and COVID was a mother of all the tests. So there is nothing left to be written off. In fact, everybody is writing back. You were seeing all the results. So I think we have a very good. And you have to lend for 3-4 years. For finally you lend badly, so you have to first start bad lending. For that, so that tide
That is
will
some
be,
time away.
Yeah, so that is 3-4 year cycle. My sense is that finance is the place to be just about started, and I think dirtiest finance companies also do very well.
Manish, do you feel the same? And do you think it's becoming a bit of a crowded trade right now? Anyone and everyone is betting on finance.
So I mean, like him, we are also very massively overweight in financials. And the risk in that is exactly what you said, that if usually consensus doesn't work.
Yeah.
But finance is such a large field, as he rightly said. So in the past, if you said finance, like last 2-3 years, you didn't make money in a HDFC Bank or a Kotak, and you made it in ICICI and Axis or SBI. It may be, because right now everyone's so worried about HDFC Bank and the merger, it may be the biggest stock is going to give you the best return. And where all of us are probably highest overweight, those may not.
Those may not.
So it's very possible that happens. But like I said, the theme no longer, you cannot play a sector. In a slowing world where growth will be 2%, 3%, let's take a IT example. It's not a sector which is favored by anyone really right now, and the theme is stay away from exporters and so on. But if you think of India is going to become from a $3 trillion to a $10 trillion economy, it has to be on the back of globalizers. It has to be on the back of people who will take away market share from players over there. Now, you can build a scenario, and I'm not saying today is the time to think about it, but for every Infosys or TCS which does well, there may be a Cognizant and a IBM Global which could be going decay. And the sector may not do well, but individual companies could completely burst out and outperform. So it is that sort of period. And similarly in financials, it's banks are there. We in the past used to talk about insurance, which is actually underperformed. There are asset management businesses, there are market-facing businesses, which again 10 years from now, if Navneet was speaking on his way out, if you'll be a $10 trillion economy, there has to be a big couple of mutual funds, which will be of very large size. And currently they're all hated because everyone thinks the BIPs are going to keep falling and everything is going to passives and ETFs. There's money to be made.
One of them is sitting right here.
Yeah, and he's smiling.
He's smiling. The opportunity size is large.
Yeah.
So you're saying one has to be discerning.
Absolutely.
I mean, it's not a sectoral call anymore. I mean, across the board.
I think across the board. This 30-year period of, take one bed, sit down and relax, it's gone.
One signal I'll tell you, like in digital what happened? Finally it ended up with a good IPOs. So let's wait for a few banks to go IPO.
Banking IPOs.
Some banking or finance sector IPOs will happen. Once it is heated, after 3-4 years, you will find that it will be so much in demand. When this FIs or global investors, they come back, they will lap it up. And at that point of time, most likely, maybe it is 1 year away, 2 years away, the IPOs will happen. That will give you a signal that now we're reaching somewhere.
You know, just to complete that point on banking, you said bad lending will happen, but 4-5 years out, it's not happening now. So there is a clean run ahead.
I hope they're not doing bad lending now.
No, is there is that a risk? Because I mean, Manish, you've talked about this K-shaped economy.
Yeah.
I mean, the mass, lower
Yeah.
segments of the. I mean,
Yeah.
that's kind of wiped out, right?
Yeah.
The premium segments, the rich are doing very well.
Yeah.
But where is this lending happening? I mean, this very strong growth happening. It's happening, I'm assuming, at the middle or the lower end. So, are we already starting that cycle? Do you think? I mean, what do you, both of you think? Quickly.
Let him go then.
Yeah, so typically the bad lending happens with the corporates, the wholesale, because retail is distributed. I mean, now there are a lot of credit agencies. So typically banks and institutions, they are able to figure out the risk in the retail, and retail is distributed. So risk is actually not there. It's within manageable kind of band. The real problem comes with the wholesale. When you have project loans, I mean 1,000 crores, 2,000 crores, single loans, 50,000 crores, 30. Now you're talking about very different scale. Whenever a capex boom comes in India, I mean the private capex boom, it will be not of 100 crores, 500 crores and 1,000 crores. It will be of few $1 billion each pieces. Like what we talked about, chip factory of 140,000 crores. Like that, you'll talk about 10 million tons of single steel plant, 20 million tons of cement plant. Like that, it will come whenever it starts. So, the risk of bankers will go in those kind of concentrated risk, you know, in the wholesale.
Retail is very templated, so what you're saying is the risk is
distributed. Very distributed and very manageable. It is the large losses. And now which bank will underwrite apart from SBI? I don't see any bank who is willing to, who has appetite to underwrite this kind of loans.
Absolutely.
Manish, you want to weigh in quickly?
So slight variation on that, that any lending, if you're levered 12 times, anything you do wrong can blow you up. And every crisis in the world has been a leverage crisis. It's not ever been a stock market crisis because someone levered went crazy. Retail was subprime, retail was mortgage in US and across the world, and they figured out how to blow themselves up. So it's not, because our last experience was we blew up on infrastructure lending and so on, we are still thinking of that. But trust me, I mean, bankers can be very creative when they want to earn their bonuses, and they can blow up anything when you give them, you know, 12x and 20x. And we're still reeling from the Credit Suisse and the Deutsche Bank episodes where they're still talking of 30, 40 times leverage. I wonder in a post-GFC world, how are they allowed to get away with this sort of leverage? So that's there. The risk, again, in our, just to diverge a bit on our consensus call of financials, is if 300 basis point interest rates have gone up in the US and in Europe and elsewhere, it's actually a quadrupling of interest rates. And they are all levered more than 300% of GDP. So it's a 9 to 10 percentage point of GDP increase in interest. The repercussions of that, government balance sheets, 3% of GDP hit to fiscal deficit, 3% hit on corporates which had levered up to do buybacks, which had driven those markets, 3% on personal balance sheets where the saving rates don't exist. What does it do to those economies, and how are the repercussions of that going to come and hit us? I don't know. But it is something serious. And already you see, therefore, Europe has withdrawn from quantitative tightening, UK has abandoned it, Japan has abandoned it, so only US is doing tightening. At some point when the pain hits, I don't think the Fed chairman is going to repeat what happened with, you know, in Paul Volcker's days, because the politicians are so weak and they have elections to win. So you need a Ronald Reagan to have a Paul Volcker. Do you think the current leadership in the world inspires the confidence that they will continue to give pain, go into deep recession? So that's really the risk to banking will come from outsiders feeling scared about banking globally, and therefore India must do bad. I don't think Indian banking has never been in better shape.
Okay, so
Indian
that's the
balance
moot
sheets
point,
never
right?
been in better shape.
That's the moot point, that
Yeah.
amidst all the global
Yeah,
chaos,
yeah.
India is sort of the beacon of hope. All right, we have to take a short commercial break, but I do want to ask you folks about the new sectors that are emerging, right? Whether it's electric vehicles, renewable energy, but more on that in a bit. Let's take a quick commercial break and be right back. Welcome back to our Diwali special. Once again, here's wishing all our viewers and their families a very, very happy Diwali. One of the best ones that we've had in the recent past. We have been in discussion with Manish Chokhani and Raamdeo Agrawal. Raamdeo ji, I wanted to get straight to the point. You know, what are the sectors to watch from here on? Some of the beaten down sectors are coming back into action purely because of the valuation headroom.
Yes,
so you tell me, which ones do you like?
Yeah, so I mean, you can do your numbers, but the most headed sectors and which are of some significance is, of course, one full group is that PSU. Under PSU, what of 45, 50 companies are there. That has been kind of a big disappointment. And there again, you know, everything is not flying. To some extent, I think defense has been their monopoly. So defenses, some of the companies are very asset light, very high ROE, consistent companies. At times, cash flows are challenged because government fiscal deficit at times extends to their balance sheet.
But
So-
those stocks have run up a lot
yeah,
as well, right?
so but I think that's a theme now, in the sense that maybe it is popular right now, but other than that, say a lot of large companies are there. They are also trading at single-digit P multiples. Coal India, ONGC, Oil India, HP, BP. I mean, entire energy basket, and you know what world is going through. So what will happen, I don't know. But these are all hated companies.
ESG and all is out of the window now. I mean,
Coal India and ITC were big performers last year.
Yeah,
Big
yeah,
performers.
ITC has now come back, but that's
Yeah.
a private sector. So that's one segment. I mean, I think you have to find some large companies which are not done well because the wind is going from one direction to other, and market is trying to find within financials what are the hated ones. So hated ones are PSU banks. So they can be a good, maybe not a very long-term investing, but as a trade, you know, you buy it less than one book. Like most of the banks are available at 0.7, 0.8 books, and except SBI. SBI is a little premium. So leader of the pack is SBI. So I think, so that's a very large, so you like financials, and in that not so favored is the PSU banks. So like that, there are opportunities. Your real estate, after I think 12, 13 years, 14 years, they are coming out of the slumber. And the last 12 months only it has just picked up. Stocks have picked up a lot. But still, like say DLF, if you call it as a very large this thing. So I remember in 2007-8, it had gone to, after listing, it had gone to about 1100-1200 rupees. Even with everything, all clean up, and still it are about 350-400 types. So what I'm saying is that sector still has that runway, and it is just coming out of slumber.
But in PSU banks, I mean, let's be honest, right? Last decade, PSU banks have done nothing for investors. So are you saying that this is just a trading
value
for
will keep
bad
migrating.
best?
Yeah, it's just a trading bet.
Yeah.
Value is migrating.
Yeah.
I mean, at one point of time, 2 years back, 120% of the profit was coming from private sector banks. And so I still think that of the profit pool, largest profit pool is in the total corporate profits of about 9 lakh crores. Largest profit pool is from the financials, banking and financials, and of that, even larger portion is from the private sector banks. So that shift of the profit share within the large profit pool is going to keep happening in favor of. So if you can find a private sector bank reasonably well run, growing at rapid pace, you know, and little expensive, that is a much better investment than buying very cheap bank but gone nowhere in 10-year basis.
Manish, you've liked media as a space for a long time.
As well. So I'll just complete the financial one, and I don't normally talk stocks, but I'm compelled because the best bank in India by far has been HDFC Bank, and it's done nothing for 3 years. And even now, it's like, oh, how will they grow? How will they get deposits? I mean, with a 5-6% share of a banking sector, where the economy is still going to triple over the next decade, where your share of financial savings is going to go up. If you're going to tell me that the largest player here doesn't know what to do and how to grow, it's a bit of a kind of no-brainer. And because there will be forced selling, because their MSCI will exclude them and Nifty might exclude them, and it's fabulous. It's an opportunity which I hope everyone in India takes whenever it happens, if it happens.
Right.
I'm not hoping it does, but you know, that's something which you can speak on Diwali.
Absolutely.
It's a national icon, and one should think of it that way. But coming to your media point also, I think we've spoken a lot in the past about this OTT and how overhyped it was. And now when the leader of the pack, Netflix abroad, has also put in, you know, the hands on the floor and said we cannot survive without advertising, and eventually it's another medium of broadcasting into people's homes. And in India, we had taken the wrong analogy. We were trying to produce Game of Thrones and sell it to the poorest guy in India without collecting any money. So that model is broken. Media is, I think, even more hated than PSUs. And there is a change which is, already visible over there. 2, 3 listed companies, you can figure out which one. So I think there is serious cash flows, good ROI, improving management, improving payouts. Things will change over there. The third thing I'll point out, since you asked new sectors, is when you look across the world, and I go back to this globalizing theme where near-shoring, friend-shoring are the new themes. You go to Europe, their whole chemical industry is shut down because they can't cope with the energy costs. And chemicals was basically Europe and China. Everything had migrated. Textiles had migrated away. If you don't want to buy from China and you cannot produce in Europe,
India.
and in any sector, when you want volume and you want skill, you can go for something to Vietnam, you can go for something to Philippines. But when you want volume, you come to India, whether it's for IT, whether it's for chemicals, and that skilled manpower exists over here. So, and the profit pool, as he said, of that sector is very tiny today. It's probably $1 billion or $2 billion. Can these guys make 10x of this? And who is the new person who comes out? Like if you had told us 20 years ago, Petchem will thrive in India, one Reliance comes out and takes the opportunity. That opportunity exists in a lot of manufacturing spaces over here. So that's where one would look around. Manufacturing is also hated in a sense in India. But I think there's
Slowly getting some love though. Slowly. Just about starting.
Let's hope. Because they deserve, all these manufacturing guys deserve Padma Shris for going out to work, facing the hostile environment. They should all be given awards every year.
Actually, a manufacturer was recently telling me this is one of the toughest times to keep a business going, for a business to survive in India. I don't know what's happening globally. But on that very optimistic note, thanks a lot for joining in and wishing both of you wealth, happiness, prosperity, but most importantly health, because we've all learned that that's all you can wish for, right? Well, with that, it is curtains down on this Samvat special. Thanks a lot for watching. Keep it with CNBC TV18.